Hey friends, my name is Behroz and welcome back to the channel. Today we are talking about Canadian tax changes for 2025, and trust me, this is something you'll want to stay on top of. Did you know that taxes are one of the biggest expenses Canadians face, even more than the housing cost? That's why understanding these changes could help you save a lot of money and plan smarter. Now, one special ask before we start. If you find any value from this video, don't forget to hit the subscribe and the like button and share it with anyone you think needs this information. Let's make taxes less painful, one video at a time. First up, let's talk about the tax-free saving account, which is TFSA. So for 2025, the annual contribution limit stays at $7,000, which is same as 2024, but here's the exciting part. If you've never contributed to a TFSA since it was introduced back in 2009, your total contribution room now stands at a massive $102,000. Why does this matter? Because any growth, whether it's from dividends, interest, or capital gains, is completely tax free and you can withdraw money whenever you need without penalties. So any money you have in this account is tax free in terms of its growth and investment coming from dividend or earnings coming from interest. So if you're saving for a vacation, a car, or even a rainy day fund, a TFSA is no brainer. Think of it as your ultimate tax free piggy bank. Now let's move to the registered retirement saving plan, which is RRSP. The contribution cap for earners has increased to 32,490 from 2025, up from 31,560 in 2024. Here's why this is huge. If you contribute $10,000 to your RRSP and your marginal tax rate, let's assume is 40%, you get an instant tax refund of $4,000. That's money in your pocket today. But remember, the RRSP taxes are deferred. It doesn't eliminate them. You'll pay these taxes when you withdraw during retirement years. But since your income will likely be lower in the years of retirement, you'll end up paying less taxes. It's a win-win for a long-term planners. Alright, next up is First Home Saving Account or FHSA. While this was introduced in 2003, but given it's a new tool that the government has offered for building wealth and it is also majorly underutilized, it is important we talk about this as well. If you are a first-time home buyer, this is your golden ticket. For 2025, the annual contribution limit remains $8,000 with a lifetime cap of $40,000. Here's what makes it special. It combines the best of RRSP and TFSA, which is contributions give you tax deduction like RRSP, and then when you withdraw for an eligible home purchase, it's tax-free, just like a TFSA. So best of both, tax saving in the year you are investing and then tax-free growth thereafter. Think about it. If you contribute the full $40,000 and assume your marginal rate is 40%, you'll save $16,000 in taxes. That's like the government giving you huge discount on your first home. I made a separate video on FHSA where I explain this account in detail. Now for some not so great news. Canada Pension Plan CPP contributions are increasing. In 2025, the maximum contribution rises to $4,034 from $3,000 to $867. This is an extra $167 a year coming out of your paycheck. So something to keep in mind when budgeting for the year ahead. Now, here's some good news as well. Federal tax brackets are being adjusted upwards by 2.7% for inflation. This means you'll pay slightly less tax in 2025 as more of your income falls into lower brackets. Plus the basic personal amount, the amount of income you can earn tax-free, rises to $14,538, which means a little more money in your pocket with every paycheck. Essentially, the tax brackets are moving upwards, and there is a good chance that if previously you were on a cusp of a tax bracket, you will fall in a lower tax bracket, hence saving you some tax bills. Now let's talk about something that will affect investors, capital gain changes. Again, this change was put in effect in 2024. However, since it's fairly new, I find it's important we address it as this may adversely impact your tax bills in 2025, primarily driven by increase in capital gains inclusion rate. Capital gains inclusion is the amount of capital that is subject to tax. Previously, it used to be 50%. That is 50% of your total capital gain in any year is taxable. The balance 50% is tax-free. However, with this new change, the 50% inclusion rate only applies to capital gains up to the first $250,000. Any capital gain above that will have an inclusion rate of 66%. If you're planning to sell a large asset like a rental property or stocks and big gains are there, this change could increase your tax bill significantly. So make sure you consult a financial advisor before making any major moves. Alright, let's quickly recap the major changes for 2025. The TFSA limit stays at $7,000 with total room of $102,000. The RRSP contribution cap rises to $32,490, offering huge tax savings. FHSA remains the best deal for the first-time home buyers. Slightly higher CPP contributions for 2025. Federal tax brackets are being adjusted for inflation, and we've got new rules for capital gains. Here's the bottom line. Whether you're saving for a home, retirement, or just trying to reduce your tax bill, these updates give you new opportunities to plan better and save more. Thanks for watching. If you found the video helpful, give it a thumbs up, subscribe to the channel, and let me know in the comments what tax changes are most you are excited about. See you in the next video.